In March of 2022, the board at Seritage Growth Properties commenced a process to, quote, review a broad range of strategic alternatives to enhance shareholder value. And 4 months later, in July 2022, they announced that shareholders would be asked to vote on a proposal at the 2022 annual meeting on a plan to liquidate the entire Seritage Growth Properties portfolio, with the logic being that Seritage thought they could distribute somewhere between $18.50 and $29 per share in cash to shareholders through a liquidation process. Well, this week the Seritage 2022 annual meeting was held, that vote took place, and the shareholders overwhelmingly approved the plan for sale. There were 45.1 million shares voting in favour of liquidation and only 433,000 voting against. So, ignoring those who abstained from the voting process, that is a very, very convincing 99% approval by shareholders to liquidate Seritage. Now, in this video, I want to give an update on a few things. Firstly, I want to talk through some of the other outcomes from the 2022 annual meeting. I also want to talk through a revised range per share that SRG gave that they expect to be able to distribute over the next couple of years. We'll have a look at some of the data on property sales that Seritage have actually been able to do so far, because they're actually already selling properties pretty quickly. And I also want to share a story of a very similar real estate liquidation, which was of a restaurant chain called Luby's, and that liquidation had a guy called John Gorelli, who was pretty heavily involved in that whole process. And very interestingly, John Gorelli was actually appointed the Seritage CFO in January this year. Now, Seritage is a stock that many super investors have been in and out of over the years, and there's no better super investor to follow than Warren Buffett. So if you want to check out some of the top 5 most interesting stocks, in my view, that Warren Buffett has been buying in 2022, then check out the first link in the description. That will take you over to Simply Wall Street and will actually show you a curated list put together by me on some of Warren Buffett's biggest purchases this year, some of the data behind those companies, and some of the reasons that I've put together around why I think Warren Buffett might be interested in those stocks. If you're interested in signing up to the Simply Wall Street platform more generally, then the first 100 people to use that link will also get a 40% discount on the unlimited Simply Wall Street plan. Now, firstly, an update on some of the other outcomes from the 2022 annual meeting. Unfortunately, the meeting New Zealand time here for me was, I think, 3 a.m. on Tuesday morning, so I didn't catch the meeting itself. Seritage did put out a document, an 8K filing to the SEC, which had all the results of various things that shareholders were asked to vote on. I did actually contact investor relations at Seritage, who did get back to me asking for a replay of the annual meeting or even just a transcript, and unfortunately neither of those two things are available. But luckily for me, there are some other shareholders who did watch the meeting live and were able to, give us some updates on exactly some of the commentary that management gave. But before we get into some of those comments from management, there were a few other things that were voted on that you can see in the SEC filing. We had basic stuff like the approval of auditors, election of trustees, and approval of an executive compensation plan. So aside from the liquidation proposal being overwhelmingly voted in favour of, there's no kind of other major outcomes out of the things that shareholders were asked to vote on. Now, like I say, unfortunately, I was not able to catch the SRG meeting live. If anyone does happen to have some sort of replay or transcript of that meeting, by the way, definitely let me know. I would be very appreciative of it. But I have to give a shout out here to David on Twitter. I will link David's Twitter down in the description below, who has been following Seritage very, very closely. And he gave a couple of brief updates on Twitter about some of the things that management mentioned in the annual meeting. Now, 2 things really stood out to me there. The first one is that they did actually give a revised kind of dollar per share range in terms of what they think they can distribute over the next couple of years, and that is $18.50 to $23.75. So they've kept kind of the bottom end of that range in place. They've pulled down the top end of the range. That is pretty much in line with expectations. If we look at a filing that Seritage put out on the 14th of September, they did say that, current market conditions for real estate and so on meant that the top end of the range is probably unlikely. So they have more formally now revised that range. Apparently, there was also a mention of share buybacks being, quote, interesting in the $10 to $12 per share range, but probably something that would happen much further down the track if it did ever happen. They would have to have repaid all the debt and probably retired the preferred stock first. And just chatting briefly with Matt Peterson yesterday, he kind of had similar views that it's probably very unlikely that a buyback actually happens. If Seritage can pay down all the debt, retire the preferred stock, and continue to give more and more certainty around what the cash distributions might be, the gap between net asset value and the market price of Seritage is likely to close, which would mean that the buybacks really wouldn't be super effective. Now, I expect with the liquidation kind of proposal being approved that Seritage will now start to sell properties a lot quicker than they have been. But even before the vote, they have actually been selling some of their real estate holdings quite quickly. They put out an update on the 17th of October, which gave us some really interesting commentary. They said from the 30th of March 2022 through to the 13th of October 2022, the company had sold 45 properties and joint ventures, generating $410 million of gross proceeds, comprised of $183 million of gross proceeds from vacant or non-income producing assets, which is a pretty good sign for me. One of the major kind of bear cases against Seritage is that although some of their properties are quite valuable and quite liquid and, you know, fully leased up and everything, they do have some dogs in there. They have some lower quality properties that have sat vacant for a while. So to see Seritage clearing those is a really good sign in my view. They also said $161 million of gross proceeds were from income producing stabilized properties, partially leased development sites and out parcel pads, reflecting a 5.1% blended in-place cap rate, and $66 million of gross proceeds from monetizing joint venture interests. He also said that they have quite a robust sales pipeline on top of that, and as of October 13th, 2022, the company had assets under contract for sale for total anticipated gross proceeds of $400.3 million, including transactions with no contingencies but subject to customary closing conditions, for total anticipated proceeds of $171.9 million, and transactions for total anticipated proceeds of $228.4 million, subject to the customary due diligence and closing conditions. Additionally, the company has accepted offers and is negotiating definitive purchase and sale agreements on assets with offers of approximately $670 million. The pending sales and pipeline sales are a combination of multi-tenant retail assets, certain premier and mixed use assets, as well as non-core assets, and so on. So the point is, Seritage has done to liquidate quite a significant amount of their real estate, and it looks like they are pretty well on track to meet quite a big debt obligation that they have due mid next year, which is a phenomenal sign. Now, outside of the property sales that Seritage give us here directly from time to time and that we see in their quarterly updates and their 10Qs and so on, Seritage do seem to be doing sort of lower key updates to their real estate portfolio. And by that I mean that it seems like whenever they sell a property, a few people have picked up the fact that they actually just remove it from their website. And this is something that was picked up a little earlier in the year. It seemed like a few properties were falling off the Seritage website. They then came out and reported their quarterly results and gave the specific addresses of properties that had been sold in the quarter, and it seemed to line up with properties that had been dropping off their website. So it seems that more and more properties have continued to fall off the website, which suggests to me that more and more properties continue to be sold by Seritage. And again, there's been some good analysis of this on Twitter from David, who I mentioned earlier, and it looks like they're down to about 110 properties versus 170 at the start of the year and 150 at their last quarterly update. Again, it seems like a little bit of a mix of properties, but several of them are the, vacant, lower quality properties. So to see Seritage being able to clear out a lot of those relatively quickly before they even get to the far more valuable properties, to me is a promising sign. Now, I've done a video here on the channel before going through some very detailed property valuations that I did kind of late last year, early this year. So if you'd like me to go through maybe the next time Seritage reports their quarterly results, sort of a property by property analysis of what they've sold versus what I expected those properties are worth, I think that's an interesting exercise that I'll probably go through personally anyway. So if you're interested in having me share that here on the channel, let me know in the comments below. Now, I want to talk a little about the liquidation of a business called Luby's. Now, Luby's is not a company that's here in New Zealand, so I'm not super familiar with the restaurant chain, but they do own the brands to kind of the Luby's Cafe restaurant and also Fuddruckers. And John Gorelli, the CEO, who started at Seritage effective the 14th of January 2022, is actually still the interim president and CEO of Luby's Inc., which is a business that in the last year or two has gone through a pretty significant liquidation process and has a lot of overlaps on the surface, at least, to what's happening at Seritage. So I thought it would be pretty interesting just to go through what happened at Luby's and cover kind of the initial guidance in terms of dollars per share of distributions that Luby's gave, how that changed over time, and what the final distributions actually ended up being. And I have to give a shout out here to Jason from the After Dinner Investor for kind of bringing this Luby's liquidation situation to my attention. He's covered it a couple of times on his podcast and YouTube channel as well, and actually recently did a podcast with Jason as well. So if you want to go check that out, please watch the end of this video first and then check out the After Dinner Investor here on YouTube. So looking through some of the previous kind of dates where Luby's have made announcements about their liquidation, it looks like on the 6th of June 2020, Luby's put out a press release titled "Luby's announces it will pursue sale of its operations and assets and distribute net proceeds to stockholders." So that sounds awfully familiar to what's been happening at Seritage. And in that press release, looking through it, they didn't give any sort of price guidance. It was just an initial press release about wanting to go through that liquidation process. So if we kind of follow through the timeline, that was announced in June 2020. In September 2020, we got an announcement saying Luby's Inc. Board of Directors adopts plan of liquidation and dissolution. And they said while no assurances can be given, they gave guidance of anywhere from $3 to $4 per share in distributions that they could eventually pay to the stockholders. So really interesting to see that. If we carry on down the timeline, on the 10th of November 2020, the stockholders voted in favor of a liquidation, which is kind of where we're up to now with the SRG situation. And then the fun begins. They start selling properties like crazy and they start paying distributions. So on the 17th of March 2021, they complete the sale of certain Fuddruckers stores to new franchisees. In June 2021, there were two announcements. They sold the Fuddruckers franchise business and also the Luby's Cafe restaurant operations. In September 2021, they completed the sale of 26 real estate properties for $88 million and actually updated the net kind of distribution range. So it was $3 to $4. They then bumped it up to an oddly specific number of $4.89. So we got, a reasonably significant increase in the distribution range there. On the 13th of October 2021, this is now 11 months after the shareholders voted in favor, they paid a $2 per share liquidating distribution. On the 19th of October, they updated their estimate to $5 per share. So they started in the $3 to $4 range and have now bumped it up to $5, of which $2 had already been paid. They then paid 50 cents a share in a liquidating distribution and then a further 20 cents a share in a liquidating distribution in the first half of 2022. And finally, on the 1st of June 2022, Luby's stopped trading on the stock exchange and shareholders received what are called units in a liquidating trust, which for tax purposes at least were valued at $1.80. Now, basically, Luby still has to go through the process of liquidating the last of the assets, but if we assume that those are worth about $1.80, the initial guidance was for $3 to $4. They improved the guidance to $4.89 and eventually to $5. And the final payments, if you add all those up, plus the final $1.80 and kind of liquidating trust units, tallied up to about $4.50 per share. So they didn't quite get to that $5 per share range, but they were nicely sort of north of the original range that they gave. Seritage clearly is a different situation. There's no restaurant brand or anything involved. It's just purely real estate, but it's about as good a case study as we could possibly ask for, I think. We have a very recent liquidation with, a good chunk of real estate in it, and it was done by the guy who's now the new CFO and presumably kind of deal maker at Seritage. So not too many better case studies out there, I think, for SRG shareholders, at least at this stage. So Seritage seems to be kind of the gift that keeps on giving, but looks like they are finally going to liquidate. If you enjoyed this update and want to catch our future content here on the channel, be sure to subscribe. But that's it from me for this one, and I'll see you in the next video. Cheers.